What's up, Capstone fam? Hey, it's the end of the first week of March 2026. Lots of things have happened this week. I wanted to put together a quick video. Wanted to talk a little bit about, there are a lot of things that are happening right now that are outside of our control. And it brought me to a place of, and one of those things that happened this week due to other things that are happening in political events globally, interest rates rose, and they've been on the decline over the last month or so. We actually saw better interest rates for people purchasing, better rates than we'd seen in 3 years, which is amazing. They were in the fives, and that's something that we haven't seen for a while. It's still looking promising. It still looks attractive. What this did, though, is it started us down this conversation here in the office about what real estate will look like. I have a blog that I put it on my website this last week. I read this article on Medium. I can't source who it is right now. I can't think of it. But it's on the blog that I wrote on our website. And I basically took the idea from this guy who's a wealth manager, and what he had thought about was he thought through this whole process of how much money does he need to retire, right? And a lot of our owners, a lot of our clients, a lot of my friends, I'm in this age group. I'm in this with you, where we're thinking through these things. And it's like, what's enough? How much do you need? How much is it going to take? And one of the things that I love that he said, and what it boils down to was there is no magical number out there that is going to satisfy that for me particular. Now, I could work backwards from it, but what I really need to know, because the question isn't how much do I need in the bank, it's how much do I need every month? What's my cash flow need to be? What is my cash flow that's coming into me as a person need to look like every single month? I might have nothing in the bank, but if I've got some assets over here that are pumping out dollars to me every month that I can get consistently, whether that's a real estate, whether it's, you in the stocks, you guys know that stuff more than me. But again, what element of that is going to get you consistent income month over month over month? And I was thinking about this with a new associate here in the office, Ariane. I'll drop her name. She's great. She just started this week. A lot of you will have an opportunity to meet her, and I'll bring her on to video sooner than later. But she's got some pretty good experience in the real estate industry. She is, I feel very fortunate to have been through the stages of the real estate market that I have. One of those was that I was able to benefit from buying my first 10 properties before I was 40 years old, right? That's awesome. Could I do that again now? Maybe. Would I? I don't know. And that was the whole conversation, was if given the opportunity to buy my first property today, if I had to, would I or would I rent, right? For those of us that own real estate, is this the time to be thinking about how much do I need in the bank, or how much do I need in income that's going to be paying me after I decide to tie it up, right? What does that look like to you, and what makes sense? I thought it was just a very thought-provoking blog post that he wrote, and it made me really think more about it in the lines of what our clients have to be thinking about as it comes to real estate. I know a lot of you have other assets that are working for you, other things that are, which absolutely you should. And in my opinion, diversified portfolios are by far the best way to make it work. However, hey, I'm a very, very leveraged individual as it comes to real estate. I've been doing this a long time. I would be an absolute fool if I hadn't made the decisions that I did in real estate. And I probably wouldn't be here today, honestly. I wouldn't be in front of a video talking about it because I wouldn't know what I know. So I think realistically, what are the things that from that piece of it, would I buy today as a primary? Would I buy as an investment? And I think, again, similar to how much do we need this thing to be paying me in the future, how much would I be paying for it right now? What is my cost out of pocket every month? Not what is the cost of the property, because at the end of the day, I really don't care about that. I care about how much am I losing every month? How much am I paying out every month versus how much would my rent be? And I think that's the equation. And again, for a lot of people in this market, as interest rates have been a little bit higher, pricing them out of certain types of product, that's the real conversation. And for some, I think unfortunately that American dream is changing, or is looking a lot different, because the ability to get into the home that we expect is just going to take a lot longer. Hey, I hope this is helpful. Again, just kind of going on a rant this week as to seeing what's happening in the market. Real estate market is busy as heck right now. So houses are selling. It's taking more buyers through them to make that sale. And in weeks like this, where there's uncertainty, it definitely gives people a little more pause, depending on the price point. For certain price points, still moving like crazy. So you have questions about that, let me know. But again, I hope this is helpful, and I look forward to connecting again next week. See ya.